In our last video, we established that the space sector is no longer a sci-fi fantasy. It is the next great infrastructure boom. But identifying a macroeconomic trend is easy. Picking the company that will actually survive it is where the herd gets slaughtered. Today, we are looking at Rocket Lab, ticker symbol RKLB. Before we begin, full disclosure, I currently hold a position in Rocket Lab. But as investors, our greatest vulnerability is falling in love with our own thesis. We suffer from confirmation bias. So today, I am going to actively try to destroy my own investment. We are going to stress test this company by looking at the existential threats that could wipe it out.
And a quick reminder, I am a skeptic, not your financial advisor. This video is strictly for educational and entertainment purposes. Do not buy or sell any asset based on a YouTube video. Do your own math. Let's start with the most glaring risk, execution. The market is pricing Rocket Lab as a massive competitor to SpaceX, entirely based on their upcoming medium-lift rocket, Neutron. But aerospace history is a graveyard of delayed, over-budget rockets, and Rocket Lab is not immune to the brutal physics of this industry. We just saw this play out. Neutron was supposed to be flying, but the debut has now been delayed to late 2026. Why? Because during the hydrostatic pressure test in January, the first stage composite tank failed and let go earlier than expected due to a manufacturing defect. This is the valley of death for mid-size rockets. You burn massive amounts of cash fixing hardware issues, while your smaller rockets simply don't generate enough profit to cover the R&D. If Neutron faces another catastrophic failure on the pad or a multi-year delay, the cash burn could cripple their balance sheet. Then there is the total addressable market, or TAM. Every analyst claims space will be $1 trillion economy. But what if they are wrong? What if the pie is an illusion? If the broader commercial demand for space infrastructure doesn't materialize, the launch market becomes a brutal, commoditized race to the bottom on price. And in a price war, nobody beats SpaceX. If the only entities paying to go to space are the US government and Elon Musk launching his own Starlink satellites, then the market for third-party launch providers shrinks violently. If that happens, pure-play rocket companies will be wiped out. So, if the risks are this severe, why do I still hold the stock? Because the herd is mispricing the company. The market views Rocket Lab as a rocket company. They are not. They are a space infrastructure conglomerate. The real engine of this company, and the hedge against launch risk, is their space systems division. Rocket Lab is quietly building the underlying hardware for everyone else. They have built a staggering backlog that recently hit $1.85 billion. They aren't just launching satellites. They are building the solar panels, the reaction wheels, and the software. They even just spent over $150 million acquiring Minic to secure a supply of optical communications terminals, a massive bottleneck in the industry. They are commanding roughly 57% of the revenue market share among publicly traded small launch peers. As a long-term investor, you have to look past the launch pad. Even if Neutron is delayed, and even if the space economy grows slower than projected, the survivors of this industry will still need parts. Rocket Lab is selling the picks and shovels for the orbital gold rush. Investing in space requires a high tolerance for pain and a healthy dose of doubt. Rocket Lab carries massive execution risk, but the market has misunderstood its true business model, creating an asymmetric opportunity. Question the consensus. Do the math. And if you prefer signal over noise, subscribe to the Doubtful Investor.